I have over $250,000 in verifiable profit and payouts just by trading one simple OTE zone strategy. And in this video, I'm going to teach you the highest probability OTE zones, because most people teach you what actual OTE zones are, but they do not actually teach the highest probability ones. And that is exactly what I'm trying to do for you. So if you're tired of blowing accounts, you're getting close to payouts, but you cannot seem to get one, and if you're trying to learn OTE zones right now, but you cannot fully understand it, then that is exactly what I'm going to teach you today, and how to fix every single one of them. So I have over $250,000 paid out to myself, and I have over $300,000 paid out to my private students using this same exact model that I'm going to teach you today. And now where to actually find your highest probability OTE zones, that is going to be inside manipulation legs. And now manipulation legs is something that is not talked about a lot, but inside this little circle is actually the true manipulation leg. And it is the thing that simply hires OTE zones by honestly probably over 30%. So without further ado, let's actually get into what they are. So just a very basic overview of it is when you come down like this and you create a low, right? And then you come up a little bit, but not coming above that high. You stay above right here, about in the middle. Then you come down below this low, creating a new low. And then you come above this high, creating a new high. And that is your manipulation leg. And it kind of creates a W like this, if you can see that W. That is the manipulation leg. This is where your OTE zones are actually high probability. And now this is what it looks like in the charts. And this is what it looks like inside the line charts. So let's get into it over the candles. So looking at this picture right here, we have a low right here. And let's see, we create a low. We create a low like that, right? So let's mark that low out. And then you also have a high. Once again, like we showed, you come down, you create a high, and then you come down below that low, and then you come above the high. So we have the high where we come down, and then we create a low, and we also create another high. Now what do? We come down and sweep that low right there. So we sweep that low, and then immediately after sweeping that low, we come up and sweep this high. That is a manipulation leg. And I know this may seem very confusing at first, but I'm telling you that you are going to understand it all very soon. Then what do you actually do with the manipulation leg? Well, first I'm going to give you the Fibonacci settings that you actually have to have for it. So right here we have the fib, and then when we click on it, this is my settings right here. We have the 0, 0.79, 0.618, and 0.706. That is going to be your OTE zone. And then the 0.5 is the consequent encroachment or the premium and discount. So this is just your OTE zone settings. And then this is your manipulation leg settings, like the standard deviation. So you can screenshot that. And then we come down here, and this is all my settings down here. It doesn't really matter though, not that much. So what do you do with the manipulation leg? Well, what you do is you take your fib retracement, and you take this low. You don't take this low. You take the low you take the lowest low of that, right? You don't take this one. You take this one, and then you put it not to the wick, but to the body. And then you see you get to -2 and -2.5. And we're going to use these numbers later. You're going to understand these numbers later. But now let's get into the OTE zones. So that is your manipulation leg. That is your first step in knowing where your highest probability OTE zone is. So after seeing the manipulation leg, now we know where it is. Where is it? It's this right here. It is that. Once again, quick overview. We come down, we create a low, and we come up a little bit, and we go below that low, and then come up higher. That is a manipulation leg. And then finally, we would want to come down again into the OTE zone. So now getting into the OTE zone. What do? I mean, if you already understand OTE zones, you would know what to do. You would take this low. Once again, you want to take this low. You take the lowest low, and you go from the wick. From the wick is personally what I do. And then you would get your OTE zone like this. And this is where you want price to come in and retrace and then continue to go higher. So that is where you actually find your highest probability OTE zone. But you don't quite understand all of it yet. So this right here is actually a perfect example. The only thing that we're missing with a perfect example is price actually coming back and tapping into it. But it's fine. We can see right here, this is a very true A+ setup. You know why? Because we also have a fair value gap aligning with the OTE zones. Most people do not talk about it once again, but when a fair value gap aligns with the OTE zone, that is a very high probability zone. So instead of just taking a random OTE zone like this that has actually no context, like why are you taking that? Probably do not know why. It's just a random high and low, which you do not even know. So instead, you want all of this coming into the OTE zone. That is going to up your win rate dramatically, I'm telling you. But a main thing to notice is we also want to have a key level tapped within it. We don't just want a random OTE zone, or we don't want a random manipulation leg. We want a key level like this. So for example, we have an unfiltered value gap that we tap into. So that is obviously very good to use for our rejection, which leads back into the RSM model, which I teach, which I'm going to link inside the end of this video. So stay tuned for that if you want to learn my full strategy. But for now, I'm just teaching inside the OTE zones. So once again, you don't want a random OTE zone like this. You want the manipulation legs. And now going further into the manipulation legs, we're going to learn about these numbers that we were talking about earlier. So once again, after you find your manipulation, you know, when we create a low and then a high, and then we sweep the low, and then we create another higher, that is your manipulation leg. So you take this low and you put it to the body. and you would get these numbers right here. You might think they're random numbers. They're not. These are actual levels. If you don't understand levels yet, honestly, this is actually another thing that is not spoken about at all. I mean, you can probably go on YouTube, you won't even find levels, but I'm actually going to teach you right here because I'm not another one of those fake demo gurus. So right here, we have our -2 to -2.5. This is the single-handedly best target you can ever target. This is the best drawn liquidity that you could basically ever have because it is all numbers. It is all statistical. So getting back into this number, once again, this is where you would put your, take profit. So we see our manipulation leg right here that has a key level that we tap into. And then once again, we see our manipulation leg. Now what is there to do now? We take the same low and we put it to the high. What obviously the newest high, right? You don't want to put it at old high. You put it at the newest high. If you know OT zones, you already know that already. But we do that. And now an example, this didn't happen in this example, but this is still a very good, show up. This is still a very good example to show you. So hypothetically, let's say we came down into this OTE zone. We tap into the 618. This is our OTE zone if you didn't know by now. The 0.5 to 79, that is our OTE zone. Well, this is the premium discount, and then this gold zone, that is the actual true OTE zone, but you can still use it inside the 0.5. So once again, let's say we come down and tap into this. Now, where would you actually, when you enter, because obviously this is where we're entering, where do you put your take profit? Most people do not know anything about this. Well, normally you'd put it at an unfilled 5 or 15 minute Furvey gap, and that is actually still good. But if you have a manipulation, this is once again why manipulation legs are so good, because you then have the highest probability of a take profit, which is putting it inside this zone right here, this -2 to -2.5, that standard deviation zone. Because not only do you get a high probability of the OTE zone working, you also get a high probability of an actual take profit, which this is honestly the true sauce of why my students and me are printing so much every fucking month. Because not only do we understand this, but we also understand a million other things that are just like this. But if you do not understand the strategy, usually for an OTE zone, you would want a 1 minute IFG. So what is a 1 minute IFG if you don't yet? It's a Furvey gap that's created just like that. But then, in a bearish Furvey gap, you'd want the price to close above it. So a perfect example would be this. We have our manipulation leg, right? We see a low on a key level. That low got swept. And then we see that high also got swept. So that is a manipulation leg. And then what we do is we take our low to the high of whatever the newest high is, right? As market's printing. We take that, and then we would have our OT zone with also right after a manipulation leg. So we can also do that. So now what would we want? We'll want to wait for a pullback inside here. And we also have a Furvey gap aligning with the OT zone, which is another high probability of it actually working. So now we pull back in here. Let's say hypothetically pull back into here. Now what are we looking for? We would want to go in the 1 minute time frame. And we just go down to the 1 minute time frame, and we want to look for a Furvey gap while coming down, back down to this OT zone. And then once again on the 1 minute time frame, we take the most recent Furvey gap. So let's say there's like the lowest Furvey gap down here. So let's say there's like another one up here on the 5 minute. We want to take that one. We take this one. Even when Furvey gaps are stacking like that, by now you already have so much confirmation that the trade is going up that you do not even give a fuck about the Furvey gap, honestly. That you're already, your trade is basically going, right? You just want that extra confirmation, which is going to be the 1 minute IFG. So take any 1 minute IFG. It can honestly be on the 30-second, because once again, by now you have such a profitable setup that the Furvey gap barely even matters anymore, right? But it's still so good. The IFG is so powerful, honestly. So now you would just want a 1 minute IFG of price closing above it, and then you'd enter long as soon as price closes above the Furvey gap. And then you would put your, typically you'd put your stop loss right there. But if there's like something like that, sometimes you can put it at the body or half the wick. Half the wick is something that is also very good, but normally at the wick or just a body. And then, yeah, you'd take your take profit and put it inside the 2.5, the 2. And that is truly like so good. So high probability, like literally you can backtest this. I'm not even joking. You can go in FX replay or Tradeful right now and backtest the shit. But make sure you actually understand what you're doing, which is why I'm going to link my actual full strategy at the end of this video, because I'm telling you, I took over 100 trades on this. I backtested it and I got over an 86% win rate. Over 100 trades, I won 86 of them. You know how insane that is? So you can go ahead and do it yourself. Just, obviously make sure you do it right. But if you're looking for even a higher RR, you can target the 3, 3.2, 3.5, and 4. And the best thing, honestly, I haven't talked about this yet, but usually it would line up with something like a high, like a liquidity sweep, right? If it's lining up with a liquidity sweep, which that would be not, that'd be like an internal lining up with a 3. Usually, typically, you would put, your take profit at the 3. Get this lining up with it. You can see the high lining up with the 3, right? Yeah, we can see price lining up, right? The high lining up with the levels. So that is where high probability, you see we smacked it. Like, it's literally seeing the fucking charts as a whole other, it's like seeing it with the third eye, basically. Like, no one sees this shit, bro, straight up. So yeah, that is basically levels, and that's standard deviation, numbers, all statistical inside the charts. You see all these numbers and levels. So yeah, typically for your take profit, you'd want to target if it's lining up with a liquidity sweep. So target this 3, or just target that, 2.5, 3. Basically, it hit all of them right there, obviously. And then even lining up with the 4, lining up with the, say, Fairway gap. All of that. See all of the levels lining up with Fairway gap, unfilled Fairway gap. Also another confirmation that this shit is just going to smack. So yeah, that is going to end it for this OTE zone video. And obviously, I am going to drop more free sauce videos exactly like these. Basically, my main goal is to teach what other demo gurus are not, because I seriously do this shit, and I seriously do this shit with my students. And my only goal with this whole social media stuff is just to help you. So if you learn something new and want to learn more, subscribe if you'd like. Once again, I'm going to link my strategy right here. So click that if you want to learn my full strategy breakdown. Peace.